This is Cece. Welcome to the Orbit. It is Monday, October 16th, and as we do each Monday now, we are going to look at the options for income strategies on SPY and QQQ. And what we've got this morning is we've got the markets higher, and the SPY is already up 1.2% on the day. The expected move for this week was about 1.5%, so it's almost doing that on Monday's open. Now, on Friday, we saw stocks sell off to end the week, and we saw a bid for volatility pretty much all day long. Even when stocks were in the green on Friday, the VIX was higher. And a lot of that can be attributed to worries over a weekend with what's going on in the Middle East and oil prices and things like that. And Monday morning, the situation hadn't changed drastically, and that's probably contributing to some of this relief rally, among other things. So what we've got now, looking at the expected move for the rest of the week, is about 1.2% in SPY at levels of about 442 on the upside and 431 on the downside, which is that downside expected move is slightly higher than Friday's lows, as you can see on the chart. Going to QQQ, we've got the Qs up about 1.1% and about a 1.5% expected move for the rest of the week, with an upper level of about 375 and a lower level near Friday's lows of about 363 and change. So let's look at a couple of credit spreads in SPY for the rest of the week. Of course, we first want to check in on where the Iron Condor levels are based upon the expected move. And as we see, we've got a break even of about 442.5 on the upside and 430.5 on the downside. We'd like to look at lowering the delta of these break evens in each direction. And so if we widen this, let's just go 2 strikes for now. As you can see, that max gain at the bottom is now 30, risking 70, but obviously this is giving a much wider range for this to occur. Now, of course, the lower the delta you go out on the wings, the more illiquid those strikes can be. So as always, be careful with the working those orders. As we like to always say, start in the middle, cancel and replace, work that order a little bit lower, trying to find that liquidity. If you do not find that liquidity on an opening order, it is sometimes in your best interest just to move on and maybe not do that trade. Sometimes the indicated bid ask might not represent where that liquidity is, where a market maker will fill you on an order. So as always, be careful. Next, let's look at some credit put spreads. And as we go here, let's go into the credit put spread and let's flip to the out of the money really quick. This is a risking 80 to make 20 trade. And as you can see, that break even is down near Friday's lows. So, not quite there. But this is basically positioning that the balance of this week, you do not see the market reverse all the way off of this big Monday move and go lower than last week. Now, going back to the credit call spread side of things, let's go and look at that. And this is, the out of the money credit spread. It's about risking 75 to make 25. This is one of those types of trades, particularly in lieu of a covered call. This is an income generating strategy for those long the market and can be quite helpful, especially after this move higher. This is now really fading this move, but it's not doing it at the money. It's basically even giving the market room to follow through the rest of the week and hopefully expiring out of the money and adding income to a portfolio. Finally, I wanted to look at a trade that we haven't talked too much about on this segment, and that is an iron butterfly. And an iron butterfly it differs from an Iron Condor in that an Iron Condor establishes a range of max gain. If it finishes between your short strikes, you are max gain at expiry. An Iron Butterfly has a very specific max gain. And so it can be used slightly directionally. And one of the things we wanted to look at with the market higher on Monday, we've seen a lot of two-way action the last couple of weeks where the market rallies big one day and then the next day it reverses and goes lower. So in this case, what we want to look at is we're going to go to the neutral button and we're going to do an Iron Butterfly. And of course, it's going to start it at the money. Which is interesting to look at. You know, it's risking about 170 to make 430. Of course, you only get that max gain at this center strike of 436. But what I wanted to show is how this can be used slightly directionally. So we're going to take this entire trade, and as you can see, we're going to move it down here. We've got a risking 150 to make 450. And looking at this trade on the 1 month chart, it is quite interesting because what it's doing is it's basically centering its max gain right in the middle of the range over the last week or so. But it's also centering it in the range that we've seen over the last month. Now, what this is basically positioning for is a lot of this two-way movement and trying to get risk a little to fade this Monday move where you still have this range of profitability that makes sense around the recent highs and lows.